Well, good afternoon and welcome back to Lunch and Learn. So our monthly learning session designed specifically to ensure that whilst you're getting lunch, you can sit down and in a short space of time, we can add a lot of value to you and to your business and where you're at. So the whole idea is to buy some lunch from our wonderful partners, Rocco and Riley. My favorite has just arrived a little while ago, the butternut and feta salad. So if you are in Stellenbosch, if you are in Techno Park, you will know Rocco and Riley. Make sure that you get your lunch from them, have it delivered. I also have my nice ActionCOACH coffee from Rocco and Riley, and really to add as much value as we can to you. So my name is Harry Welby-Cooke. I run ActionCOACH in Southern Africa and also the firm based out of Techno Park offices in Stellenbosch. And the idea behind the Lunch and Learn was to really say, how do we take bite-sized chunks of the really important areas of your business and make sure that we can help and guide as many businesses to profitability and sustainability as possible. So the first of the sessions was time management. If you missed that one, definitely go to our YouTube channel, ActionCOACH Southern Africa, and you'll be able to catch up because time management eludes most of us. So some nice tips of the trade around that. The second one was around managing teams. How do you really go about managing your own team and make sure you're getting more effectiveness and more productivity and effort through that? And then today we're going to talk about finance. And I wrote a little bit of a teaser just this morning, and it's on the Facebook Live session. If you're joining there too, you'll see that there are only two challenges in business. And when I say that, most people think I'm completely clueless because there's all these challenges in business, yet there are only two. The two challenges are marketing and finance. That's as simple as that. There are no other challenges in business. Because if you suck at everything else and you fix those two, you will find the time, the money, the effectiveness to solve the others. So marketing we'll cover off of, I think, in 2 or 3 months' time, really break it down. And today we're going to talk about finance. But interestingly enough, marketing and finance are also the two areas that we probably, I don't want to say delegate most, abdicate most. Whether that's inside our organization, if you're big enough to run a big enough company, you've got those abdicated inside into departments, or you've abdicated to somebody externally. So we have advertising agencies, external social media companies or digital agencies. We even do that internally with staff and departments that run marketing. And we go, well, those are the crazy creative people. Let's leave them to do their bit. Let us just focus on getting back to work. And sadly, finance, the issue that we also, sorry, I see some of you have been battling a little bit with audio there, just talking about the two challenges of business, the one being marketing and the other being finance. And the reality are there are no other challenges in business, because if you fix those two, you fix all the others. So marketing and finance, also the two areas that we abdicate most. Not delegate, not outsource, not insource, but abdicate. And marketing, because it seems to be the creative side, the difficult side, the right brain people. And we've heard the analogy that says 50% of marketing or advertising is right and worth it. We just don't know which 50%, and we'll debunk those myths in a few months' time. But the finance one is often started out of when we did accounting at school and we were introduced to that. So we got confused with debits and credits. Our systems never worked out. You've got these very intelligent people called accountants and chartered accountants, and they seem to talk a language we don't understand. So we go and say, well, the bookkeeper, the accountant, in-house or external, you run the finances and let me just get on with business. And that's often also the area that we actually get taken for a ride most, where we lose a lot of money, and it's actually not that difficult. And what we want to do today, in the third of these Lunch and Learn sessions, is really help you in the next 35 minutes or so to understand where to focus when it comes to finance. So, hope you've got something to take notes on, and we're going to get straight into it. So the first one is probably the most neglected area of all entrepreneurs on the planet. And sadly, we don't have the stats in South Africa, but we know that 74% of American business owners could earn more working for somebody else than they do in their own business. Now, I found the stats to be even more alarming in South Africa when asking people, but that's not how it's supposed to be. So the first thing I want you to write down is, what is your market-related salary? MRS, market-related salary. If you had to go work for somebody else, what would you be worth? What would you expect to get paid every month to deliver the expertise that you already have? And that's a finite number for all of us. Yes, we might have a fantasy of what we'd like to be worth, but realistically, if we had to trade our business for something else, or our current role for something else, what do we think we're worth? And you write that down. And that's the first part of where you start with your finances. Because if you're not being paid what you're worth, you can just as well go work for somebody else. It's as simple as that. Because you bring a certain set of skills, a certain set of experience, and you do a certain amount of work to justify that market-related salary. But that's only one part of being a business owner. That's only one part of being an entrepreneur. Because the second part is you're taking a risk. You've invested money, you've invested time. Hell, you've invested blood, sweat, tears, and guts into the process. So you need to be getting the second part, which is the return on investment. So Mrs. Roy and Mrs. Roy are not the same person. That's kind of the schizophrenic part of your brain, maybe see it like that, because most entrepreneurs, we live out the till. So if it's going well, we live well. If it's going not so well, well, we don't live so well. But no, there's two parts. Because if I was working for somebody else, I'd get paid for what I'm worth and what I'm doing, my market-related salary. And if I was investing any money or time in something else, I would expect a return on that basis. And I have to chase both. Now, we will be doing a workshop towards the end of June, a live workshop. Look out on our website, impact.actioncoach.com, for those details. And we'll unpack maybe how to calculate that if you're not quite sure. But you need to be getting a return. So you put those two figures first into your thinking and your planning before you even go in any further in your business. Now, the reality is you might not be able to pay that today, but that's why we're going to work towards the second most important part in any business is a budget. And the first things that go into that budget are your market-related salary and the return on investment you expect to make. Yes, you're not going to make it necessarily every month, but maybe you're going to extrapolate what do I need to return over the year. Can't maybe make as much in the first 3 months, going to catch up a little bit. How you structure that doesn't matter through your budget. But you need to be paid what you're worth and you need to chase the ROI. And sadly, I see so many businesses that are trying to be sold and they say, oh yeah, but we don't make any money. That's purely for tax purposes. Okay, so where's the money? Because I'm not going to buy your business if I can't get a return. And therefore you should be chasing that. So now you've got your market-related salary, your ROI, now you plug in all your other numbers. All your expenses, what they are, maybe even what they need to be. Because you know you might need an extra person or an extra couple of people in your business. You know you're needing to replace certain assets that are coming up. You know you may be underinsured and you need to evaluate that process. Or you've got a whole lot of quotes lying of expenses you need to accept, but you haven't quite had the income yet. Put that in the budget. Now, most people start the budget on the income side. No, you start from the bottom and you work up. First my profit, then my salary, then all my expenses. But Harry, if I do that, I have to make a lot more money. I have to make a lot more sales. I have to increase my business quite significantly to get a higher turnover. Yeah, exactly. That's the point. Because we're so busy dealing with the little bit of sales that we got and trying to really, extract blood from the stone, that we never really grow the business to the level that we need to. So for most entrepreneurs, we actually have to grow quite a significantly better business. But because we don't know what that number is, we don't chase it. So the example I always use is when you had your first child. So if you're a parent, think this through and go, well, when you had your first child, did you really have money for nappies? For the toys, for the clothing, for the education? No, you just found a way. And then in your madness, you might have thought to have a second child. And in our madness, we even had 3. They're expensive little buggers. But if you have to find a way to feed them, nurture them, clothe them, school them, you will. If you don't, you won't. So you first put in all the expenses, and now you see at the top end, after having calculated your margins, what do you need to do? But that's not good enough, because this is where it becomes critical. So the next thing you have to do with the budget is work out your break even. What is the minimum I have to do so that I make no money? And again, that just seems stupid. And we know the theory of break even. Again, on that workshop coming up, we'll unpack how to do it. It's your fixed overheads divided by your gross margin will give you this number. That's not good enough, because I'm in business, or you should be now, to make a profit. So what is the minimum we have to do to still make the profit? And we calculate our KPIs, we calculate our numbers, we calculate everything we need to do based on this. Then we need to maybe extrapolate it down to say, well, when do I break even in the month? Is it nearer the beginning of the month? And sadly for most businesses, it's nearer the end of the month. In fact, many businesses never get to break even or even profit break even. So the core is to say, well, if I've calculated it and I know I'm only going to break even on the 25th, the 26th, the 27th of the month, hell, am I a little bit more specific around hitting these numbers? Am I a little bit more specific around hitting the top sales numbers? Or is it okay that we just cruise here? So once I've got the budget, I want to know what that profit break even number is, and that's what I chase. That's what I use all the time. Now, in COVID, outside of COVID, before COVID, for the next 300 years, whether you're in Stellenbosch, in South Africa, in Africa, or anywhere in the world, you've got buggers that don't pay you. Simple as that. You have to pay for things before you get paid, and sometimes you get paid late. So once we have the budget, that's not good enough, because we then need to understand what's the cash flow implications or the cash flow forecast. When do I have to pay my expenses versus when do I actually get paid for the item? And one of our clients thought, oh, well, we're delivering to a corporate, we got a 90-day account, so therefore that's our cash gap. Really? When we actually went and assessed it, they were actually getting paid on average 112 days on a 90-day arrangement. That's a whole different discussion for another day around managing debtors. But when we looked at when they actually had to pay their suppliers and then freight certain raw materials from the east, they were sitting on a 9-month cash gap. No wonder the owners were pulling their hair out and frustrated and stressed. So you have to understand when that flow of money comes. When's it going out and when's it coming in, and how big is the funding gap in the middle? Because here's the reality. Management's sole purpose. Now the owner of the business might be the same person or different, but I'm looking at management specifically. Management's sole purpose is to make the business more cash. Cash. Because you can make more profit and it can be stuck in debtors, it can be stuck in stock, it can be stuck in work in progress. Management's job is to make more cash. Well, if we don't know how it flows, when it's paid, where it's sitting, we can't manage it. So we got Mrs. Roy, our market-related salary and our return on investment, which influences our budget. On that, we've broken it down to ensure that we've got a profit break-even minimum that we're chasing. And now we've understood the cash flow implications. When is money going to flow? Because there's that whole thing around, turnover is vanity, cash flow is sanity, and profit is king. Yeah, it's true. It's a saying for a reason, because cash flow constraints are what will drive you insane. And you have cash flow constraints both in the good times and the bad. In the bad times, because you've got too many expenses and you've got too little sales. In the good times, because you've got too many sales and you're having to fund and feed that growth. And just because the market is doing a certain cycle, your business might be doing the opposite of that. A number of our clients had record years last year, the best years ever. The world didn't have the best year ever. So your cycle might be counter what's happening in the market. But you have to understand that. You have to know the flow. And how do you work it out? Yes, you can do elaborate projections if you have a big enough company to justify that, if you have a big team to do it, or good old pen and paper, calculator. You can put it into an Excel spreadsheet, you can do fancy formulas, you can do pivot tables, you can do a lot of other stuff at the advanced level if need be. But if not, You just keep it basic. What is going to come in versus what's going to go out? When is it going to match, if at all? And what do I do to manage that? And often if we know what that is, we'll apply more pressure to our debtors to be within those 90 days and not stretch to 112. We won't pay our creditors early if we don't have to, because we'll understand the implications. Stress is not a good way of managing your finances. We want to be proactive and have the control on that. So that leads us into the fourth area around your finances, and that's your management accounts. Now, management accounts are something the accountants do, right? In fact, I normally get management accounts when I need a loan from the bank, because the bank says, where's your financials? And I go, oh, financials are out of date. Or even if they're up to date, they're old already, and the bank says management accounts. And then I reach out to the accountant and I say, please, can you send me my latest management accounts? No, make it look a little bit better because I need the funding. Yeah, that's not how you manage it. It's called management accounts for a reason. It's how I manage my business rather than thumbs up, or there's money in the bank account, or I'm feeling okay because nobody's shouting at me for money this week. No. The other reality is you cannot rely on management accounts that are 1, 2, 3 months old. Or like somebody said to me the other day, no, I get management accounts from my accountant. And I said, great, when do you get them? Once every 6 months. Excuse me? How are you going to manage your business with stats that's 6 months old? So I'm going to write this in red, because this is when you need your management accounts. If you don't have them by the 7th of the month, get rid of your accountant. Now, all respect to the accountants out there, because they might be waiting for you for information. So you might have to up your game and get your act together so that you can have your numbers in time. But if you're not getting your management accounts by the 7th, there's a problem, because you've already missed the first week of the month to fix what happened last month. Now I've only got 3 weeks left. If I'm getting it later than this, now I've lost 2-3 weeks in the month. I'm never going to catch up, because last month's problem carries over to this month. Not, right that month, if we didn't make it, let's try again. Oh, she didn't make this month, let's try again. No. Because you've done a budget, because you've understood the cash flow applications, and now you're checking if you're on track or not, it needs to roll over, and therefore I need the information quite quickly to make better decisions. Because if I'm not able to make those decisions, I am literally fighting in the dark. And that is the reality that we find with a lot of businesses, is we're going on gut instinct. We're making really crucial decisions in the dark. And whilst gut is a developed skill, aptitude of any entrepreneur, because it comes with experience, when it comes to money, you want to be making decisions on fact, and this is what should be giving you the facts. So make sure that your stuff is right with the accountant, so that they can give, whether internal accountant or external accountant, doesn't matter, they need to give that information to you by the 7th, because now we need to know who's paid, who hasn't paid, what is sitting work in progress, what is our cash flow implications, did we hit our sales targets or not, are we on track with our expenses, or are we running away with our expenses? We can't make management decisions if we don't have that information. Thus, again, I'm repeating it again for a reason, it's called management accounts. It's not for the bank accounts. It's not when the accountant has a chance. It's not if I can find a way to pull the reports from Xero or whatever my accounting system is. No, it's management. It's need the information I need to make decisions. And then once you're using it to make decisions, you'll find it's actually not a foreign concept. It's not that difficult. It's not just the reference point for accountants. It's what allows you to run a more sustainable, more successful business. Right, so we've got management accounts, item number 4. Then we need to start understanding not the mechanics of our income statement, but we need to start managing the income statement. Now, it's pretty simple. Most of us check what's going on at the top, because that's our turnover. And then we sort of glance at the bottom, and just as a reference point for those that don't maybe know this, sounds very facetious, I know. If it's in red, if it has a minus in front of it, if it is in brackets, that is bad. That's not for tax purposes. That means all our efforts are leading to naught or minus because we're not making money. But there's a whole lot that happens in between that we need to be understanding and driving. And not, again, like I said, the mechanics. The beauty about this is the comparisons of the income statement are important. Year on year. What did we do end of April this year versus end of April last year? Great comparison. What did we do month on month? What did we do end of April this year versus end of March this year? In fact, what did we also do end of April this year versus end of April last year? Because it's in those comparisons that we'll see, okay, turnover's up, turnover's down. Expenses are up, expenses are down. Seasonality is okay or not okay. We did something in the past that worked that we're not doing anymore, or vice versa. We've done something really well and we want to make sure that we know what that is so that we can repeat it. I remember a client a couple of years ago saying, we had this great year, we've grown, we've beaten all our competitors. And I sent to the finance director, I said, well, what did you do to get that? Right, what did you do? And he looked at me as if I was mad. Why am I asking this question? I said, well, you've had a great year, you've made these great successes and these leaps forward. What did you do to influence that? And he looked around at where the CEO was standing and he said, to be honest, we don't really know. So what do you mean you don't know? He says, well, we don't know. We just had a lucky year. The stars aligned, projects came together, and we made a good amount of money. I said, well, that's great for this year. But if we don't know what it is, how do we repeat it? How do we do it again next year? We can't. So this allows us to do that questioning, that depth of understanding, to say, okay, we made money, why? We didn't make money, why? We've spent more money, why? We've spent less money, why? Again, it allows us and equips us to make decisions. And it's not, like I said, the mechanics. It's literally understanding the comparison. It's literally looking at the line items and saying, does something jump out to the positive or the negative? We can then do quarter on quarter analysis. The first quarter of the year versus the second quarter of the year. This quarter of the year versus last time this year. That same quarter. Because it's the trends, it's the information over a period that is truly valuable to us. Not just grind through it every month, end of the year. We do this because SARS want it, our bank might want it, and then what? No, it's a management tool that we can drive. Because this says, for all our efforts, are we making money? And nobody should be in business not making money over a period. The odd month is okay because of the cycles and the turns, but over a period, nobody should be in business not making money. And nobody's ever going to buy your business if it's not making money. Because if this is minus brackets red, I don't want it. Nobody wants it. And if they want it for free, or they want it for a bargain. So all of this proves whether we're on track to make money or not. So you need to start managing it. And for now, just do the comparisons. The sixth area is, despite the fact that number 5 was whether we're making money or not, this is, what is all these efforts worth? So if we at any given point tally up everything that we've done, what is it truly worth? Is it moving in the right direction, that this business is becoming worth more and more and more? We're growing the asset's becoming more valuable, or is it going backwards or staying the same? So income, how much money have we made for the period? Balance sheet, what is all this worth at the end of the day? Now here, there's a lot of analysis to go into it. One of the most neglected areas in anybody's financial statements is the cash flow portion of your financials. The others is to do all sorts of clever little analyses which are not critical, but the 3 main ones that you want to be managing and keeping tabs on are, and this you can do monthly, maybe even more often if you've got a complex, big business. What is our debtors? And what is the average debtors turnover or the debtors days? If we say we've got a 30-day account on average, are we sitting in 30 days? In fact, we should, because we're doing some business cash or short, to have less than that on average. Most people, when they actually go look, they've got 30-day accounts with their clients, but they're sitting on significantly more days. Okay, then we as management need to put something into place to pull that back. What are on average our creditor days? If we've got accounts with suppliers of 60 days, are we paying them on time? Are we stretching it? Are we paying penalty interest? Are we not getting our rebates early enough because we're not able to pay on time? Or are we just being really nice people and paying quicker than we should and there's no real benefit? So we rather want to slow down our payments so that it matches our terms and arrangements so that we're actually conserving more cash for our own business. Lots of insights just out of your creditors' days and your creditors' turnover. And then the third element, stock. Stuff that sits, that should be used to make us money. Some of it is, often a lot of it's not. We've got stuff that's outdated, we're carrying too high levels. Maybe even we're carrying too shorter level. Our customers are getting the hell in with us because we can't deliver quick enough. How are we funding that stock? Is it paid? When's the money going to come in from it? Let's understand what's happening with our stock. So before we look at more complex things on our balance sheet, we want to be looking at debtors, creditors, and stock. Those are the critical ones, because if we can get those right, we've won half the battle, because that's the biggest drivers. Remember when I said management's sole role is to make the business more cash? Those are often the three biggest pitfalls of why we're not making more cash, is those three things. So critical to focus on that. The other thing is, again, balance sheet comparisons. Not so much quarter for quarter. If you've got a really seasonal business, you might want to keep tabs on that. But the reality is more year on year. Specific dates and times that you want to track. Has all our efforts resulted in this business being worth more? Are we growing our equity base? Are we growing the total capital available and invested? Now, if you have an asset-rich business, you also want to make sure that you're getting a return on your assets, not just on the overall investment of the business on the assets. Because otherwise I could sell those assets, lease them back for a better return. I could sell those assets, put it in the bank and make more money out of them. So obviously there's ranges of complexity as we go into more complex, mature, bigger businesses. But the basics are the same. So critical, let's just recap. What are those 6 areas that you need to focus on? The first one is Mrs. Roy. Mrs. Roy is your schizophrenic, bipolar best friend. What are you getting paid as a market-related salary, as well as what are you returning for the time, effort, and risk you're taking? It's the first thing and most important, and you need to work towards that as quick as possible. Otherwise, excuse the word, you get gat full of your own business because you're putting in all this effort and you're not getting a return. And that's when people hit burnout, that's when people get tired, distracted, lose energy, lose passion. And it's not because I don't love the business anymore, it's just because I'm not getting the return. So Mrs. Roy, number 1. Number 2, budget. With Mrs. Roy going into my budget, adding all my expenses as well as what it should be, not what it is. What do I need to make on the top end to still make that profit? And then for fun, not to do the break-even analysis, to do the profit break-even analysis. What is the minimum we have to do in this business to make money? And what day of the month do we actually hit that point? Because that often creates a lot of urgency for us around what needs to happen. Mrs. Roy, budget, then cash flow. When is the flow of this money happening? The money out versus the money in. Is that gap big? Is it small? What can we do to manage it? I cannot have all my suppliers on 30 days if my clients are only paying me 60 days. So I might have to renegotiate on the terms of a variety of deals, or maybe just some of the biggest deals. So there's different ways of looking at that, and obviously we unpack that when we coach our clients. So Mrs. Roy, budget with profit break even, cash flow, and then we need our management accounts. When? By the 7th. And you need to get your act together, but you need to put pressure on the accountant. If they cannot give it by the 7th, you've got no time to fix last month. Which means you're going to miss half of this month, which means you're going to be 2, 3, 4, 5 months down the line before you address the issue. It's management accounts for a reason. I need to manage my business with that information. Must get it by the 7th. Pull the reports yourself. If you can, get your accountant to pull the reports, get your bookkeeper to pull the reports, get it sent. You just make sure whatever happens on the 7th, that information is on your desk so you can review, are we on track with what we said is going to happen? And if not, do we know the reasons so that we can fix it? Positive or negative, it doesn't matter. Then we want to make sure that we're managing the income statement. Most important, the comparisons. Before we get technical and all the other things, the comparisons. Line item versus the previous time line item, totals versus previous totals, year on year, month on month, year versus last month, quarter on quarter, previous quarter versus last year's quarter. Start with those as the basics. And then the last one, the balance sheet, is our friend because it makes us understand what is all this worth at the end of the day. Is all this effort not only making us money, but is it worth it? Because it might be making us money, but if we sold it all and invested, we could make more money. We're not seeing the business becoming worth more. We're not seeing a growth in equity in the process. Or we've made a lot of money, but now it's stuck in debtors and in stock. So remember the 3 critical things on a balance sheet we want to be looking at. Debtors, the days, the turnover. Are we getting it as quick as we expect to get it? Is it in line with what we're paying on our creditors' days? And on our creditors, are we getting the true deal? Are we getting our rebates? Are we paying too soon or too late? Are we paying penalties? Is there unnecessary interest? Lots of insights into that. And then the stock, obviously we want stock to turn as quickly as possible. And I say as quickly as possible because sometimes as quickly as possible is a long time. If you're having to invest upfront, pay suppliers, go through a long work in progress cycle before you get your money. So it doesn't really matter how long that is, as long as it is as quick as possible and efficient for your business. And if not, then you have to put a range of different strategies into place of how to do that. So 6 simple areas takes the myth of accountants and our accounting teacher in high school out the room and gives us, hopefully for you now, the right things to focus on to make sure that your business is going forward. If you're a manager running a division, a senior exec in the business, it's no different. You have to be doing the same thing for your division. It's as simple as that. Your sole role in management is to make the business more cash. And of course, as the shareholder or owner of the business, your priority is return on investment. Mrs. Roy, you have to be chasing both. So let's just see if there's any questions coming through. If you do have any questions, just let me check here, type them into the chat box, and we'll see if there are any coming through, and then we'll deal with them. So, yeah, question quickly. The website that I referenced was impact.actioncoach.com. So go to impact.actioncoach.com. All these events that we run will be listed there. Once you register once for Lunch and Learn, you get all the reminders for the rest of the year. So you can attend that. We will be doing another Meet the Neighbors in July. We did one last month, so every quarter we get the tenants of Technopark together to do a Meet the Neighbors. That'll be in July. And there will be another event in June. So all that's on the website. You can also register there for the newsletter. Just checking here. Yeah, the event that we're doing in June, we haven't got a date for that yet. So it will be towards the end of June. It'll be a live event. So we're not going to be doing that on Zoom or webinar. It will be a live event at a venue here in Technopark in Stellenbosch. It will be available for any business in the area. And we'll go obviously into a lot more depth for that one. Okay, website again, we answered that one. The next topic for next month, so it is always the 2nd Tuesday of every month. Same time, 1 o'clock to 20 to 2. We want to get you in and out as quick as possible. Topic for next month is sales. And probably my favorite topic because it's most people's least favorite topic. Everybody thinks they're not very good at sales. And next month we're going to talk specifically around the basics of sales, work a little bit with maybe your mindset around that and some practical things that you can do to ensure that you get sales. Because whilst marketing and finance are the only 2 challenges in business, we don't want to waste marketing. And all sales is making sure we don't waste marketing. Marketing is there to create the awareness, to create the interest in our product or service, and sales is to ensure that we can convert that interest. If we suck at sales, we have to do more marketing. If we get really good at sales, we have to do less marketing. And obviously marketing costs money, and we want to maximize that as far as possible. So we'll definitely be doing that next month, targeting sales. Last question and let you go. Can anybody attend these events? Absolutely, anybody. So we do run them on Facebook Live, where you can attend. Most important, rather go to the website and register. Anybody's welcome to register for these events, whether you're a business owner, whether you're thinking of getting into business, whether you are somebody in somebody else's business, managing, running it, you just want to get some more insights. So you're welcome to share that as wide as you want. It is completely free, and it's bite-sized chunks of everything that's important. All the recordings, like I said, are on the YouTube channel. You'll find it on the website too. So if you did miss a session, you can go back and track it there. And that's it from a questions perspective. So thank you for joining. We're 4 minutes short, so you've got a last couple of minutes to just do a bathroom break. Make sure that next month you same place, same time. Get your lunch from Rocco and Riley. I'm going to enjoy my butternut and feta salad now. And then most importantly, like the name of the business suggests, it's Action Coach for a reason. It doesn't help you attend these sessions and you don't implement. The actions you take on the back end of learning this will ensure that you make or break your business. So do take the actions. And if you want to engage with us further, our contact details on the website, and we're always open to chat. Have a great afternoon, everybody, and a good May. We'll see you in June for the sales session. Keep well. Cheers. Bye-bye.